วัสดีค่ะ Deputy Minister of Finance ดร.เผ่าภูมิ โรจนสกุล Distinguished guests, ladies and gentlemen, a very warm welcome to you all to Thailand Focus 2024. My name is Kamon Chanok Pukhayaporn and I am delighted to be your MC throughout the day. Thailand Focus is the largest annual investment conference in Thailand, and this year marked the 18th year of our flagship event of the Thai capital market under the theme Adapting to a Changing World, which revolve around resilience and strategies for dealing with challenges and uncertainties. This year, the Stock Exchange of Thailand, in collaboration with co-host DBS Vickers Securities Thailand, Kiet Nakin Pathara Securities, and Tisco Securities to organize this event. Thailand Focus is an exclusive platform for leading global and regional institutional investors to gain knowledge about investment opportunities in Thailand. Ladies and gentlemen, may I now invite President of the Stock Exchange of Thailand, Dr. Phakon Peetathawatchai, to deliver his welcome address.
Dr. เผ่าภูมิ โรจนสกุล Deputy Minister of Finance, Professor กิติพงษ์อุรพีพัฒนพงษ์ Chairman of the Stock Exchange of Thailand, Dr. เศรษฐพุทธสุทธิวาฒนฤพุทธ Governor of the Bank of Thailand, Excellencies, distinguished guests, good morning. It's my great pleasure to welcome you all to Thailand Focus 2024, the flagship annual event of the Stock Exchange of Thailand.This year's theme, Adapting to a Changing World, is particularly relevant as we navigate a period of rapid disruption, both here in Thailand and across the globe. Today, our conference will feature insightful discussion led by the Deputy Minister, our Chairman, the Governor, and notable speakers. They will discuss the direction of Thailand economy and capital market.highlighting significant business and investment opportunities in this transformative era, opportunities that I believe will redefine your view of Thailand investment landscape. In this unprecedented time, Thailand, as an integral part of the global economy, face both challenges and opportunity driven by technological advancement, emerging industries, and climate change.We are witnessing the rise of the new industry, investment relocation, digital transformation, and innovative climate strategies, all crucial aspects of the country's adaptation to the evolving economic ecosystem. At the Stock Exchange of Thailand, we recognize the necessity of embracing these changes and sustain the growth and resilience of our market.Today's sessions are designed to reflect the nature of change and adaptation. We will examine the progress of Thai capital market amidst disruption, discuss the impact of the industry evolution and investment shift, and consider Thailand's potential as a medical hub. Additionally, we will explore the role of digital innovation in transformation of supply chain and identify business opportunities arising from new climate policies.The Stock Exchange of Thailand is committed to fostering a platform where top policymakers and market participants to exchange their expertise. Our aim is to create an environment where business thrive, investors discover opportunities, and society benefit from our collective progress. I would like to extend my deepest gratitude to our esteemed speakers and moderators for their valuable information.I also would like to thank our distinguished guests for participating in Thailand Focus 2024, and I hope that you will gain clear, actionable insight into Thailand investment ecosystem, and I look forward to the collaboration that will emerge from today's discussion. In conclusion, I leave you with this thought: with every change comes a new chance. Let us adapt to advance and innovate to enhance. Now, Please join me in warmly welcoming Dr. Phawphoom Rojanaskul, Deputy Minister of Finance, for the opening address.
President of the Stock Exchange of Thailand, Chairman of the Stock Exchange of Thailand, Secretary General of the SEC, Governors of Bank of Thailand, Ambassadors, Excellencies, distinguished guests, ladies and gentlemen. First of all, I would like to say good morning and welcome to Thailand Focus 2024, adapting to the changing world. It is my great honor to open this event and deliver my speech on embracing change, igniting growth. As we gather to explore the evolving landscape of Thailand, we are reminded of our remarkable journey through transformation and progress. Today, I will share with you Thailand's economics vision, our strategies for advancement, and the promising opportunities that are awaiting investors in our vibrant economy. Ladies and gentlemen, over the past decades, the Thai economy has demonstrated its potential to adapt and its varying strengths across different time periods. Our industrial and service sectors have been crucial in driving growth, with major exports in automotives, electronics, plastics, and chemical industries developing to meet global market demands. However, in the past years, our GDP growth rate has not reached its full potential. This is due to something we can call complex factors, including a global geopolitical tensions, risk of economic slowdowns, and volatilities in global financial markets. Domestic factors such as political situations and delays in government budget disbursement have all impacted our economic growth. Despite these challenges, we have confidence in the resilience and adaptabilities of the Thai economy, and we are seeing signs of economic recovery. Recent economic indicators shows promising signs of recovery and growth. According to the latest figures from NESDC, Thailand's economy expanded by 2.3% in the second quarter of this year. This growth was driven by private consumption and robust export of goods and services, particularly in tourism-related sectors. And this year, we expected to have the growth around 2.3 to 2.8%, with the expected acceleration in the second half of this year. This projected growth is supported by various government economic stimulus measures and accelerated public spending, which are boosting consumer confidence. Ladies and gentlemen, in the past COVID-19 era, we have witnessed advancements in digital technology innovation and artificial intelligence, presenting significant opportunities for economic restructuring. In Thailand has a strong economic foundations and several key strengths, including its central location in ASEAN region, high quality infrastructure and utilities, abundant natural resources, as well as a skilled and adaptable workforce. All of this forms an important basis for future growth. However, the government is well aware of global trends coupled with the urgent needs to address climate change and the emergence of the new technological innovations that are impacting traditional supply chains and businesses. Therefore, we need new investments to maintain the country's competitiveness. The government is committed to create a suitable environment to support both domestic and foreign investment. We are taking proactive actions through infrastructure investment, improving regulations and supervisions, offering various incentives to those considering investing in Thailand, and promoting technology and innovation, especially in high-growth industries and future economy. Data from the BOI shows a trend of establishing production bases in Thailand. In the first 6 months of this year, investment promotion applications increased by 64% compared to the same period last year. Of this amount, 63% is investment in target industries, led by electronics and automotive sectors. Thailand is attracting investment in industries benefiting from global production relocation trends, including data center, industrial estates, and electronic components, aligning with the country's long-term vision of being a hub of high-value industries. Ladies and gentlemen, the government has established the Ignite Thailand strategy to position the country as a regional economic hub, focusing on 8 areas: tourism, wellness and medical, agriculture and food, aviation, logistics, future mobility, digital economy, and financial hubs. Each of these hubs bring diverse investment opportunities for investors, especially in becoming a regional financial center that will allow global financial institutions to conduct international transactions. We are considering measures to drive this forward with the initial plans to create a ready financial ecosystem, offering a various privilege and establish a one-stop authority to improve laws and regulations, attracting capable service providers to establish a base in the country. These measures will be carefully considered while maintaining fiscal stability. In the capital market, we've seen development in many areas, including measures to increase liquidity and promote good corporate governance. These improvements will enhance the Thai capital market's attractiveness to the global investors. The government has implemented measures for capital market development, including the Vayupak Fund, expected to launch this year. This project aims to increase saving options for the public and support the ongoing development of the Thai capital markets. It follows improved conditions and tax benefit for investment in the Thai's ESG mutual funds that promote sustainable business practices. We are considering other economic stimulus measures, including the digital wallet project, with details to be revealed by the new cabinet. Ladies and gentlemen, Thailand is entering a transformative era, focusing on development of the country's potentials across numerous sectors. We are promoting new high-value industries such as semiconductor, data centers, and green energy technology. In the tourism sector, we are exploring innovative concepts to enhance our offerings, including the development of the large-scale entertainment complex. This ambitious project could potentially integrate performance center, world-class concert hall, luxury hotel, gaming amenities, and a variety of other entertainment and leisure facilities into one comprehensive destination. These initiatives demonstrate our commitment to diversify Thailand's economy and using our strength in both traditional and emerging sectors, aiming to create a more resilient and competitive economy. Investment in large-scale infrastructure remain crucial, with several projects such as the expansions of Suvarnabhumi Airport, the development of high-speed rail, and the land bridge project connecting the Andaman Sea and the Gulf of Thailand. These initiatives will enhance Thailand's logistic and transportation potential, positioning it as a regional connectivity hub. Ladies and gentlemen, as we look to the future, Thailand is ready to write a new chapter of economic growth. The challenges of the recent past have underscored our flexibilities and adaptability. I invite you all to be part of this growth, whether through a capital market investment, foreign direct investment, or partnership with the high potential companies. There are numerous opportunities for everyone to participate in growing together with the Thai economy. Finally, I encourage you to explore the various economic opportunities presented today. Please consider the attractiveness and investment potential that Thailand offers as we are prepared for the change and create sustainable growth. I thank you all for interest and hope that you will gain valuable insights and perspective from today's seminar. I invite you all to join us in igniting the futures of Thailand together. Thank you.
We wish to express our profound gratitude to Dr. Phauphum for the opening speech. May I kindly ask Dr. Phauphum to remain on the stage for the photo session. And I would also like to invite the following executive to be on the stage. Chairman of the Board of the Stock Exchange of Thailand, Professor Kittipong Urapi Pattanapong. Secretary General, the Securities and Exchange Commission, Dr. Pon Anong Butsaratragoon. President of the Stock Exchange of Thailand, Dr. Phakon Pita Thawatchai. Chairman of Association of Securities Company, Mr. Pichet Sithi Amnoi. Chief Executive Officer of DBS Vickers Securities Thailand, Mr. Piyachon Jaichongkit. Chief Executive Officer Kietnakin Pathara Securities, Mr. Apinan Kleopatinon. Deputy Managing Director Tisco Securities, Mr. Thapana Phanit. And Managing Director and Chief Country Officer Bank of America, Ms. Ornkanya Pibuntham. Ladies and gentlemen, what makes this year special is that the Stock Exchange of Thailand marks the exciting lead up to our milestone 50th anniversary. As we reflect on our rich history and look ahead to a promising future, we remain dedicated to our mission to make the capital market work for everyone. At Thailand Focus, we are continuing the collaboration established last year with 3 esteemed global securities firms. We extend our gratitude to DBS Vickers Securities Thailand, Kietnakin Pathara Securities, and Tisco Securities, our co-hosts, for their invaluable contributions. Thank you very much for the photo session. Ladies and gentlemen, the upcoming session is Revitalizing Capital Markets, Boosting Efficiency and Restoring Confidence. We are truly honored to have Chairman of the Board of the Stock Exchange of Thailand, Professor Kittipong Urapi Pattanapong, to share his valuable insights. Professor Kittipong, with over 40 years of expertise in business law and capital market, has been recognized as a leading lawyer in Thailand. He has authored over 10 books and previously served as chairman of Baker and McKinsey Thailand. And he continued to hold prominent roles in both corporate and public sectors. So, ladies and gentlemen, may I now invite Professor Kittipong on the stage, please.
His Excellency, Deputy Minister of Finance, Dr. Phawphoom Rojanaskul, the President of Stock Exchange and the Secretary General of SEC, distinguished guests and ambassadors. Good morning and welcome to Thailand Focus 2024. In the theme, Adapting to a Changing World. As the chairman of the Stock Exchange of Thailand, it is my honor to address you on these critical topics of revitalization of our capital markets through enhanced efficiency and restore confidence. We gather today in a world of rapid change and unprecedented challenge. The global economic landscape is shifting beneath our feet, driven by technological advancements, geopolitical realignment, and evolving investor preference. In this dynamic environment, adaptability is not just an advantage, it is a necessity. Thailand capital markets has shown remarkable resilience, weathering global financial storm, political uncertainties, and the recent pandemic. To thrive in this new era, we must proactively shape our future, positioning ourselves as leader in innovation and sustainable growth. The Stock Exchange of Thailand has developed a strategy focused on 3 key pillars: trust and confidence, market competitiveness, and sustainability. This forms the foundation of our vision for a vibrant, efficient, and forward-looking capital market. Make it work for everyone and every future. Let me elaborate on these 3 pillars and our initiative to bring them to life. As a lawyer in my practice for 43 years and sitting in a member of legal committees and listed company and also IOD, I have found that a governance is a key issue in regaining trust, and confidence. Timely and effective legal actions is crucial in maintaining trust. As lawyers say, justice delay is justice denied. Trust is the bedrock of any thriving capital market. We have made enhancing trust and confidence our top priority through key initiatives. Tightening collaboration between regulatory bodies. I have seen a great need to strengthen collaboration and exchange cases information between regulatory bodies to improve the enforcement process. Thanks to the support of Mr. Pichai Chuntawachila, the current Deputy Minister of, Prime Minister and Minister of Finance, and the former chairman of the SET. This week, on August 26, we have signed MOU with the Securities of Exchange Commissions and the Anti-Money Laundering Office to enhance enforcement efficiency. This agreement facilitates information sharing, expertise exchange, potentially shortening the prosecution process from year to month. Strengthening legal framework, moreover, we are collaborating with key regulators, SEC, AMLO, and public prosecution to redesign the workflow. This redesign aims to facilitate better information sharing and to engage regulator in the enforcement process from its initial stage. Notably, for the first time, both the chairman of SEC and SET background are lawyers, bringing valuable expertise to this initiative. Leverage technologies and AI. We are harnessing AI to enhance our operations, including bolstering market surveillance, monitoring system risk across stock and bond market, and utilizing AI to identify suspicious disclosure or activities by listed company, enabling a clear understanding of their financial well-being. This AI application will significantly boost overall efficiency of market surveillance. Emphasizing transparency, we are committed to clear communication and timely disclosure of investment impacting information. For example, we have provided key data like program trading and short sale values. SET and SEC are considering implementing disclosure requirement for share financing transaction by major shareholder or directors, as well as encouraging more effective participants in opportunity days or off-day events which facilitate investor executive meeting. This effort aims to empower with the information needed for informed decision-making. Inclusive market ecosystem. We are committed to creating an ecosystem that supports all investor segments, from retail to institutional, domestic, and international investors. This includes introducing tailored products, educational initiatives, improving rules and regulations, and ensuring equal access to services and information to all market participants. Number 2 pillar is market competitiveness. In today's interconnected global market, maintaining competitiveness is crucial. We are taking several strategic steps to ensure that the Thai capital market remains an attractive destination for both domestic and international investors. We are promoting capital market utilization in high-growth sector by encouraging listing from future-oriented industry. Many of our listed companies are now involved in the new economies sector like digital, commerce, new medical, and agriculture, food tech. That's what the Deputy Minister talked about, hubs in Thailand. We are exploring schemes to incentivize large corporations to invest in new economies, business, or startup, and to encourage this startup to accelerate the transformation to move up to MAI or SET. Additionally, we are providing a development platform for SME startup through the LIFE platform. The initiative aims to nurture new business, facilitating their capital funding or eventual listing in the stock market, and supporting expansion into the larger market. We are considering various approaches to support target sector like healthcare and food tech. Our idea we are exploring is how we might average the capital market to accelerate innovation of this area. For instance, we are looking into the potential setting up the listing holding company that could invest in this innovation or target company. This concept, if realized, might not only speed up the development of cutting-edge technologies, but also open up exciting new investment avenue in our capital market. We are continually innovating to meet evolving investor needs. Recent introductions include new ETF, providing exposure to global market, fractional DR, allowing easier access, the information stock, and digital asset trading platform. This new offering not only providing our investor with diverse opportunities, but also position our market as a gateway to regional and global investment. Recognizing that competitiveness in today's world often means looking beyond border. We are fostering partnership with other exchanges in the region and beyond. This collaboration will facilitate cross-listing and create new investment channels, increasing the depth and the breadth of investment opportunity available to our investor. Infrastructure remains the backbone of any competitiveness market. We have invested heavily in our technological infrastructure, implementing a new state-of-art trading system developed with Nasdaq. The system aligns with international practice, accommodates higher transaction volumes, and supports global investment products. It features international protocol for increased foreign investor accessibility, enhanced market depth, visibility, and nanosecond level time stamping. We have also upgraded our market data and surveillance system, improving our ability to detect and analyze abnormal trading efficiently. This advancement positions the SCT as a technological advanced exchange globally, creating a seamless, cutting-edge trading environment that benefits all market participants. By implementing this initiative, we aim to position the SCT not just as Thailand exchange, but as a key player in the global financial ecosystem, making our market work for every future and everyone. Number 3 pillar is sustainability. Sustainability is now central to long-term value creation and risk management. We are strengthening our commitment to integrate ESG consideration into the fabric of our market. We are actively promoting the ESG integration among our listed companies. As of last year, 445 listed companies, approximately 50% of the total listing company, have provided greenhouse gas disclosure, a 30% increase from previous year. Notably, the total greenhouse gas emission disclosed by this firm decreased by 6.1%. We are launching our Value Up initiative to enhance corporate governance, shareholder values, and investor communication, integrating it with our upgrade Thai ESG fund scheme. This scheme, which has attracted increased investment flow, offers tax benefit for investing in companies with high ESG rating and strong governance practices. Another significant development in this area is the initiative of the Vayupak Fund to invest in Thai capital market, which you can hear from the discussion with the SEC and ST after this. The fund provides an attractive saving option for a compelling return structure while supporting market developments. Thank you for the Minister of Finance for continued support and further supportive initiative. To support this, we are strengthening ESG disclosure requirement and expanding our ESG rating coverage, providing investors with better tools to access the sustainability performance of listed company. Moreover, we are engaging FTSE Russell as a leading global provider ESG rating to evaluate the ESG performance of our listed company. This is crucial for attracting both domestic and international capital. Additionally, we are developing and promoting new sustainable finance products, including ESG-focused fund and innovative offerings like carbon credit and other climate-related products. We are also exploring other financial instruments that can drive sustainable growth. Our goal is to channel more capital forward sustainable development initiative, align our market with global effort to address climate change and promote responsible business practices that benefit both the environment and society. Recognizing the significant role of family-owned business in our economy, whereby 67% of our listed companies are the family business owned. We have developed target programs to support their growth and succession planning. This commitment extends to our sustainable finance initiative, as we believe the capital market is essential for the long-term development of this business. This August, we successfully held second International Annual Conference for Family Business, further demonstrating our dedication to this sector. The event provides valuable insight on how the capital market can support family-owned business in areas such as professional management, capital structure, optimizing, and governance enhancement. By bridging family business with capital market opportunities, we aim to foster their sustainable growth and contribute the overall economic resilience of our market. Ladies and gentlemen, as we progress through today's session, you will gain deeper insight into the various aspects of Thailand capital market and economy. Our program covers current topics that have been disclosed to you. This expert discussion will offer a comprehensive view of Thailand capital market landscape and its opportunities. As with my legal background and capital market experience, I am committed to boosting efficiency and restoring confidence in the Thai capital market. We are ensuring our regulatory framework is robust, fair, aligned with international best practice. This legal foundation underpins all our efforts, from improving process to developing new financial products, fostering trustworthy and dynamic market. The Stock Exchange of Thailand is dedicated to creating opportunities and enhancing trust in our market We are adapting to change, fostering innovations, and building resilience to remain globally competitive. Our initiative in AI power surveillance, sustainability, and new product development aim to boost efficiency, transparency, and investor protection. With your support, we can build a capital market that shape tomorrow demand and allow investors to capitalize on Thailand's growth story. I encourage you to engage actively in today's session. Let's work toward a vibrant, trustworthy, and prosperous future of Thailand capital market. Thank you very much.
We extend our deepest gratitude to Professor Kittipong for his invaluable insights. Thank you very much. Ladies and gentlemen, the upcoming session is Thailand's Monetary Policy Challenge, How to Manage the Risk in Changing Global Environment. We are truly honored to have the Governor of the Bank of Thailand, Dr. Sethaput Suthiwat Naruput, to share his valuable insights. Dr. Sethaput is the 24th Governor of the Bank of Thailand and board members of the National Economic and Social Development Council, the Securities and Exchange Commission, and the Insurance Commission. He brings extensive experience from senior positions in both public and private sectors, including service on the Monetary Policy Committee. Ladies and gentlemen, may I now invite Dr. Sethaput on the stage.
Sawadee krap, distinguished participants. First, let me thank the Stock Exchange of Thailand for having me here to share some thoughts on the overall macroeconomic picture and what it means for monetary policy. But before I start and look forward, I think it's appropriate to try to look back a bit and think about what things were like when I was last here. I think I was here virtually, though, speaking to you in August of last year. If we look back last year, the macro picture at that point was, we had undergone this period of fairly steady disinflation. We had brought inflation down from 8% down to ballpark, it was about 0.8, 0.9%. And when I spoke to you, it was about, we felt that, we had got the inflation down under control, and the picture was one of this slow but gradual recovery, right? Slow because, again, we were hit very hard by COVID, but, we saw things continuing gradually. With the benefit of hindsight, I chose a good time to speak because I spoke to you in August, but what we saw after that was that fourth quarter numbers came out and they turned out much poorer than expected. When we at the Bank of Thailand, along with actually pretty much all the economists and analysts out in the market, were surprised by the drop-off in the fourth quarter. We were expecting this kind of slow but steady recovery in the fourth quarter, but what we ended up seeing in the fourth quarter was this sharp drop-off. And that fourth quarter GDP of last year contracted by 0.5% on a quarter-on-quarter basis. And I mention this because a lot of the recent downgrading of forecasts and whatnot was triggered by that slower than expected, poorer than expected fourth quarter outcome. And if you look at what was underlying that poor fourth quarter outturn, a good chunk of it was due to delayed budget disbursement. Another part of it was due to a rundown in stocks and also a delayed export recovery. I mention this, talking back about history, because at that point, when we looked at it, we felt that the recovery was still intact and that short, sharp drop-off was likely to be temporary. And when we looked again, looking back again, we saw that, indeed, after that fourth quarter drop-off, things slowly started to come back. Actually, we saw first quarter numbers come in, as you know, we had a first quarter number, quarter-on-quarter figure of 1.6%. 1.6% doesn't sound like a lot, but again, coming from a drop-off of 1.5% in the fourth quarter and a pickup of 1.6%, that's a significant increase in the momentum. And then we saw, again, a continued recovery, albeit slow and slower. The second quarter number that came out in terms of quarter and quarter was about 0.8%. But the point is that a lot of that, that downgrading of forecasts and whatnot that we saw was driven largely by what happened in the fourth quarter. But the overall picture, I think, of it as slow, admittedly slow and slower than we would like to see, recovery remains intact. And a lot of it, again, I think is got to do with these factors which hopefully will dissipate going forward. If you look, for example, at the cumulative impact of the delayed fiscal disbursement from fourth quarter of last year and first quarter of this year, cumulatively, that added up to about 0.8% of GDP, so a big chunk. But again, we expect that those delays to not happen going forward. And again, the picture again is one of a gradual recovery going forward. Second half this year, looking ahead now, the momentum of the recovery in the second half compared to the first half is actually likely to taper off because we saw this, again, in terms of momentum, a significant pickup in the first half. So growth will continue, but likely to slow down a bit in terms of momentum. But we'll probably close off the year. Our latest public forecast that's out there is a 2.6% headline GDP growth number, which again is pretty much in line with the other government agencies and a lot of analysts out there, right? And we'll talk about whether that 2.6% figure too high, too low, what that means later. On the inflation front, the latest outturn in inflation, July numbers came out at about 0.8%. Again, it's below our inflation target range of 1% to 3%. But again, we see inflation slowly recovering and getting back within our target within the fourth quarter of this year. The second half of the year as a whole, the inflation should come in at above the target range slightly. But closing off, given that the first half of the year inflation came out lower than expected, we close off the year at about 0.6% headline inflation. Lower than a target, but is this like a huge worry for us? And I have to say that the key thing about these inflation targeting frameworks, both in Thailand and elsewhere, is not so much about trying to get the inflation down to a particular precise exact target, but trying to keep inflation anchored into a low inflation regime and keeping inflation expectations and everything anchored as well. And I think if you look at the surveys of inflation expectations, the actual outturns and whatnot, in that regard, it's intact. The thing obviously we do not want to see is that there's this broad deflationary impact on the economy. But again, there are very limited signs of that. If we were going to see broad-based deflation, you would expect to see, broad-based decline in prices in the consumption basket. We don't see that. Most of the decline in prices is concentrated in a relatively limited number of product categories, and you would expect to see, a sharp slowdown, even negative consumption growth, because if people expect prices to drop. They don't spend, prices drop even further. You get stuck in that deflationary loop. You don't see that in Thailand, right? You don't see that negative wage price spiral. Don't see that here either as well. So again, that the risk, even though inflation is coming in and below the target, it does not mean, and we do not see any signs of this, that there's this broad-based deflationary cycle taking place. So what does this mean? That's the kind of the picture on the kind of macro front. What does this mean for monetary policy? We had, as probably many of you know, a Monetary Policy Committee meeting last Wednesday, August 21st, and the Monetary Policy Committee at that meeting decided to vote to hold rates steady at 2.5%, 6-1 vote. And 2.5%, I know, every time it's reported in the press, it's always said it's a decade high interest rate in Thailand. Yes, a decade high, but also albeit pains to point out that it is also among the lowest policy rates around the world. I can think of only 3 countries around the world where the policy rate is actually below us right now at 2.5%. But be that as it may, in terms of the outlook for monetary policy, what we've been communicating, I think, steadily is that in deciding monetary policy, we will be outlook dependent rather than data dependent. Subtle distinction, I know, because the data obviously informs the outlook, but I think it's important to try to see what because again, data comes out with a lag and policy happens with a lag. If you overreact to the latest data, there's a chance that you will overcorrect in one way or the other. So we try to emphasize and base our decisions on what we see the outlook happening. And in terms of outlook, as we've, I think, communicated fairly steadily, consistently, I should say, there are three things that we look at. Okay? First, obviously, is the growth outlook. And on growth, as I mentioned, again, this year we expect headline coming in at about 2.6%, next year about 3%, which is broadly in line, again, with roughly where our long-term growth potential is. Okay, which, based upon our latest studies and estimates, it's coming in at about three sub a little bit. It's not a great number, and don't get me wrong, we're not happy with the fact that our long-term growth rate potential is at that reduced level, because it's not enough to lead to the increase in living standards and welfare that we feel is necessary. It's low relative to our GDP per capita. So certainly we'd like to see higher long-term potential growth rate. But that stuff can only come if we undertake structural measures, right? There are structural reasons why our GDP potential growth rate has been declining. A lot of it has to do with demographics. Previously we had labor force growing, and as many of you know, that's no longer the case. We have a situation now where the labor force is actually shrinking. So if you want GDP to go up and your labor force is shrinking, the only thing you can do is increase your productivity. I mean, there's no way about that. And so the things that we would need to see there, again, would be more investment and improvements in technology resulting in labor productivity. That's the only way that you can sustainably increase our long-term potential growth rate. Barring those structural reforms, it's hard, regardless of how much stimulus we inject into the system. Yeah, you'll get a short-lived blip and whatnot, but it's not going to be sustainable. And what we really need at this point is a sustained increase in the long-term growth rate. So, on the growth front, again, 2.6% this year, 3% figure next year. Not great, lower than a lot of other countries, but again, broadly in line with what is our new normal long-term potential growth rate. On inflation, again, likely this year, 0.6%, next year something on the order of about 1+%. So coming back into our target range, and again. I think there are a lot of structural factors that point, again, that trend inflation in Thailand is not likely to be that high. And again, that low inflation does not indicate that the economy is slipping into deflation. If you look at some of what these structural reasons why trend inflation in Thailand is relatively lower than other countries, there are a bunch of things that one can point to. First off is, like many developing economies, food is a big chunk of our CPI basket, much larger than you see in the advanced economies. But we see food inflation in Thailand actually lower than food inflation in other countries, so that tends to bring our inflation lower than what you might see elsewhere. If you look at why the advanced economies have seen such higher and more persistent inflation, a lot of that's due to services inflation, which has outpaced goods price inflation. But in Thailand, it's the opposite. Our services inflation has been much lower than in other countries, and so rather than again acting as a boost to inflation, the low service inflation has caused inflation here to trend to be lower. Rent, in particular, has been fairly stagnant, is kind of a drag on inflation here in Thailand. And I mentioned those things not again that it's a worry. If you ask most people whether they feel inflation is too low, meaning the public out there, I think most people feel that no, the cost of living is increased. They don't feel necessarily that higher inflation is necessarily a good thing for them. But I mentioned it again just to indicate that again that there are structural reasons again why trend inflation is likely to be not that elevated in Thailand, but it does not indicate again the presence of a deflationary cycle taking place. The third thing that we look at in terms of outlook in deciding a monetary policy is financial stability. And this is a trickier one. It's a balancing act. As you know, one of the big challenges we face here in Thailand is the fact that household debt is very high. 90+% is a share of GDP. And the way that you solve a household debt problem is not necessarily to add more debt to the debt that's out there. At the same time, obviously, if credit conditions are tightening too much and it leads to a slowdown, that's not good either. So there's this balancing act that needs to take place in terms of how to address the household debt problem. The problem is particularly difficult to address in Thailand because of the nature of household debt in Thailand, which is quite different from what we see in a lot of advanced economies. If you look at the structure of household debt in Thailand, ballpark, about a third of it is mortgage debt. Only a third of it is mortgage debt. A lot of it is either higher purchase debt, autos, which are a depreciating asset, or it's unsecured stuff like credit card and personal loans and whatnot. So unlike in a lot of other countries, right, if it's a lot of mortgage debt out there, one way to kind of get out of the problem is if asset prices pick up, then the leverage decreases and you're better off, the households are better off. But in Thailand, because a lot of this is it's not secured by this underlying asset, which has the potential to appreciate, main way you can get out of the problem is to increase incomes, which is not easy and which is not happening as much as we would like to see because, again, of the slow economic recovery and the fact that the slow recovery has not translated into significantly higher income growth. So the problem of household debt is not going to be easy to solve. There's no silver bullet. It's not going to go away anytime soon. And our job there is to try again to manage it so that obviously it doesn't increase, get out of control, and try to bring it back down to more sustainable levels. What is that level? Again, there's no magic number out there, but again, most international practice, good practice on this indicates that something on the order of about 80% of GDP is a level that is more consistent with long-term financial and macro stability. So that's kind of the long-term end target. But again, given the situation, it will take us time to get there, and that will be important part of our calculus in deciding monetary policy for going forward. So what kinds of things are top of mind concerns for us on the monetary policy front? There are many. There are many things that I worry about, a lot of things I can't do anything about, so the rational, logical thing is try not to worry about it. So let me focus on the stuff that I worry about, which we can have some bearing on in terms of monetary policy. So let me point to two. First off is that the recovery is very uneven. If you look at it, we see this wide heterogeneity in the recovery. We see this. You look at it by sectors. So you see certain sectors that are recovering quite well. For example, those related to tourism or services related to tourism, those have been recovering quite well. But you look at other sectors, right, particularly in manufacturing, the recovery is much, much weaker, right? You see sectors that are hit and affected by factors relating to China, for example. So there are certain sectors, many of you are probably familiar with things like petrochemicals and whatnot, sectors which used to be able to export to China, but now exports to China have dropped off because China has increased their capacity in those areas by a lot. But not only is that increased capacity resulted in China importing less, they're also exporting a lot more. So they're both companies in Thailand and even the third country markets that we export are being hit by this increased supply from China. So there are these China-affected sectors, which is acting as a drag in manufacturing as well. So the recovery in those sectors is much more muted as well. Autos and electronics are facing, again, also structural headwinds as well. And the confluence of these factors means again that a lot of that slow recovery that we're seeing is not just a result of the cyclical slowdown, but there are a lot of structural headwinds that are occurring at the same time that's putting a drag on the recovery and leading to this heterogeneity, that differences in outcomes quite widespread. That's the picture by sector. If you look at the picture by income group or employment group, again, a very wide degree of differences and a wide degree of unevenness in the recovery as well. Obviously, when COVID hit, there were lockdowns and whatnot, those that were employed in salary-earning jobs, those of us in the white-collar world, we could work from home, right? So we worked from home, and the incomes were still being paid and whatnot. But in Thailand, unlike in a lot of the countries, there's the share of the labor force, which is comprised of daily workers that are non-wage workers. So these are taxi drivers, right? The merchants, the mekha out there that are again related to tied also to the tourism recovery. They can't work from home. So when things locked down, right, their incomes effectively went to zero. And so there was this, even though their incomes now have recovered back to where it was pre-COVID, there was this big hole, this big gap during this period where they had basically no income. And again, keep in mind, Thailand is a country, right, where tourism accounts for whatever, 12% of GDP, right? Pre-COVID, we had 40 million tourists a year. And then during COVID, we had this period, this 12-month period, where we had on the order of effectively zero tourists. It was a couple of 100,000 tourists. We went from 40 million tourists a year to a couple of 100,000. So, a huge chunk of income was gone, but those people still had debt, right? So their debt burdens would increase. And so for those people, right, the recovery doesn't feel like it's happening. And again, this gets to my last point on this about the uneven recovery, which I hear a lot when we talk about, when we at the Bank of Thailand say, the economy is going to grow at this percent, whatever the number is, that the recovery is continuing, it's gradual, it's slow. And the reaction that we get very often, is that you say that the economy is recovering, but it doesn't feel that way. It doesn't feel like the economy is recovering. And the reason for that, again, is this is very uneven recovery. It's like the parable of the blind men and the elephant, depending which part of the elephant you touch, right? If you're in the sector that's recovering okay, tourism services, then the recovery looks like it's much more intact. If you're in some of these manufacturing sectors that are being hit both by cyclical problems and, very importantly, structural problems, then you don't feel that recovery. And so, when the data comes out and we see that when the monetary policy obviously acts on the demand side, and then one thing that we've been communicating to people is on the domestic demand side, at least in terms of consumption, the consumption growth has actually been fairly solid in the past. If you look back, consumption last year grew basically at record levels in terms of percentage growth, and this year consumption has continued to grow. But again, people say, I don't feel it. I don't feel it. And again, there's a reason for that. It's because while we've seen that consumption growth happen, we haven't seen that consumption growth translate into production growth in terms of manufacturing. So there's an increasing gap between that consumption growth and that manufacturing production. And where is that coming from? Part of it, again, is that those structural headwinds that I mentioned, the impact of greater competition from China and whatnot. So even though the consumption is growing, it's not hitting the domestic manufacturing sectors and whatnot. And so there's that leads to that disconnect between the macro figures that are coming out and what people feel at a more kind of on the ground level, be it from manufacturing firms or even be it from retail households. So uneven recovery, big issue for us. Second issue is, which we try to flag in the latest Monetary Policy Committee statement, is on macro and financial linkages. And what do we mean by that? Basically that we see signs of a deterioration in credit growth and credit quality. That deterioration in credit quality leads to higher credit risks. So financial institutions are less willing to lend, and that potentially leads to, again, poorer outcomes on the macro front, and then the poorer outcomes on the macro front, again, lead to further deterioration in credit quality. And there's this danger of this negative feedback happening, which we don't want to see. Now, first point to make is that the deterioration in credit quality, that slowdown in credit growth, that was to be expected. Okay, so the issue is really about the magnitude of it and not wanting that effect to take place so much, right, that financial conditions tighten too much from an aggregate or standpoint. So, yeah, the first point to note is that the slowdown in credit growth and the decline in credit quality was expected, right, and continues to be expected. You should expect that going forward as well. Why? As many of you know, there is this thing out there in terms of financial cycle, and we're in the downturn part of the financial cycle. So a slowdown in credit growth is normal and is to be expected. A lot of it reflects the fact that during the COVID, we undertook a lot of credit measures, particularly on the SME front, directed credit schemes, injected a lot of credit into the system. So, you had that rapid growth in credit. And so, now it's coming back to trend and credit growth is slowing down. So in fact, if you look at even pre-COVID levels, credit growth to SMEs was negative, right? As a result of the measures that we put in place during COVID, we got SME credit growth to turn positive again, but then now it's coming back to trend, which is again, after an extended period of credit growth, is a slowdown is to be expected and is quite normal. The second thing was the deterioration in credit quality. Again, we expect credit quality to deteriorate. We expect it to continue to deteriorate, but we do not expect to see it fall off a cliff or see an NPL cliff or anything like that. Now, why do we expect it to see a deterioration in credit quality? If you look at what happened during COVID, given the sharp slowdown in GDP, in incomes, in employment that I mentioned, and you look at what normally should happen to NPLs, the counterfactual that we would expect to see, we would have expected to see NPLs increase sharply during COVID. They did not. Okay, and a lot of that had to do, again, with the regulatory forbearance measures and those that we put in place to try to stretch out, carry people through this COVID period. But it's normal and it's natural that a lot of people that were part of these temporary credit relief measures now start to, reality starts to hit, and a lot, there will be this deterioration in credit quality. Again, but from a macro aggregate picture, NPLs are tracking at about 2.8% relative as a share of total loans. So from a financial stability standpoint, and given, again, the buffers of the banks and whatnot, we don't expect this to translate into problems at the macro financial stability level. But the issue, again, is the burden that borrowers will face. And then, again, as I'll discuss in a bit later, there are other measures that we should that are to be put in place that will help alleviate this problem. The latest development, so we'll be keeping a very close eye on developments on the credit front. And as I mentioned, the overall credit mechanism, we see credit still growing, but there's certain pockets which are of particular concern for us. So we'll see aggregate credit, for example, to business growing. The SME segment, we see contraction in credit. Again, a lot of this reflects increased credit risk among SMEs. And so we feel that the best way to address this problem and address it in a sustainable manner, because we saw this problem pre-COVID, is not just to inject direct credit like we did before, because that gives you that temporary blip, but to address the underlying problem, which is that high credit risk of SMEs. And so we're very happy to see that the government, Ministry of Finance and whatnot, has supported our proposal to put in place what we were calling a general credit guarantee facility, but basically a facility to try to provide a more flexible and more effective credit guarantee scheme to try to make sure that SMEs continue to get access to credit. And in terms of credit quality, again, we do see a deterioration in credit quality. Initially, that was focused on the lower income households and the more vulnerable households, but we do see signs of that broadening. And again, so we'll be keeping a very close eye on that to make sure that widening or that deterioration of credit growth and credit quality does not derail that recovery that we anticipate and that we would like to see. So those are the things that are top of mind. Those are things that we're keeping in mind deciding our policy. But last point I would like to mention is that while we stand ready to adjust policy in line with the changing circumstances needed, we're not dogmatic. We continue to be pragmatic and flexible, but when deciding these things, we need to look at the overall picture. But we will be guided by behaving in a prudent way and be guided by the lessons, I think, hard-earned lessons about monetary policy that I think central bankers have learned, not just in Thailand, but I think from around the world. And what do I mean by that? If you look at the past decade, it's been a decade where a lot of unanticipated things have happened. There have been a lot of shocks. There's been a huge amount of uncertainty, right? If you look back, we went from a period where we had stubbornly low inflation globally, right? The central banks were trying to get inflation up, doing everything they could, but difficult to get it up. And we had, again, conflict in Ukraine, right? Inflation spiked, and in a lot of advanced economies, inflation was stubbornly and persistently high for quite some time, and it took a long time to try to get inflation back down. So a situation where we went from different extremes, a situation where we experienced a lot of shocks that were very difficult to anticipate. So the fact that you have all this situation where, again, a lot of uncertainty out there, a lot of potential shocks coming from which are difficult to foresee, I think puts a premium on trying to run monetary policy in a resilient and in a robust manner. Okay? And what do we mean by that? Robust meaning that it is a policy that is appropriate for a wide range of outcomes, a wide range of possible outcomes, because you don't know what's going to happen, right? So you want to try to set policy to take into account that you don't know what's going to happen with the world. Things could turn out one way, but they might turn out another way. So trying to set policy in a way that's appropriate for a wide range of outcomes, I think, is important for that resiliency and of the economy and to help ensure that the policy regime the policy framework is robust. Which means, right, that ex post, after the fact, right, policy might not be optimal, right? Because when things turn out and they're different from what one anticipated and whatnot, yeah, maybe with the benefit of hindsight, you should have done X or Y in the policy regime or not. But again, given again that there's this wide range of possible outcomes, trying to set policy in a way that is, the term I would use is being roughly right under many circumstances is better than trying to get it, exactly right, and you end up being exactly wrong. So one of the lessons, I think, of monetary policy looking back over the past decade is, both in Thailand and elsewhere, is the importance of preserving optionality. You don't know what's going to happen. So you don't want to constrain yourself excessively. You want to give yourself room to maneuver. What does that mean? It means, first, I think, you need to be careful about giving too much forward guidance because things can change and the forward guidance that you gave to markets could be wrong. And the thing you don't want to do is be caught out on a limb. Right? You saw the world was going to evolve a certain way, you communicated it a certain way, you undertook certain action a certain way, and then lo and behold, the world changes and you have to reverse course. And part of the reason we feel that's not appropriate is because there's already a lot of noise and uncertainty out there, and we don't want to add policy uncertainty or policy noise out to the uncertainty that's out in the market. It also means that we have to put a big premium on buffers and preserving buffers. If you don't know where the shocks are going to come from, then it's important that you maintain buffers and you maintain policy space. If you know where the risks are and you're a company, then you can find ways to hedge that risk. But if you don't know where the shocks are going to come from, then maybe the best thing to do is try to just preserve buffers to ensure your resiliency. Maybe it's not the most efficient thing that you can do, but it's the resilient thing to do. And the same thing that applies for you in the private sector also, I think, applies to a certain degree in the policy front. Again, in trying to ensure that the policy that we put in place is one that is resilient. So stability, very important. And in order to maintain and preserve that, there are a bunch of don'ts that I would add in terms of in addition to the do's that I mentioned, which is you don't want to add to the noise, again, to the market. We don't want to overreact to the latest data outturn. Because data comes out, it's noisy. Sometimes it doesn't mean that it's a trend. And I think if we look back at our own experience on this, bears this out. If we look back 2 or so years ago, we saw inflation in Thailand at that point peaked at about 8% headline inflation, the highest in the region, pretty much, in terms of monthly headline inflation numbers. And at that point, Bank of Thailand we were roundly criticized for, not raising rates rapidly, not raising rates, by chunky amounts, and that we were behind the curve, and that we needed to really, really take rapid actions in terms of tightening to try to make sure that inflation came down. But again, when we looked at it, right, for a lot of the reasons I mentioned, structural reasons why we felt that inflation that we saw was likely to prove transitory, which at that point, you remember 2 years ago, was a very unpopular word, right? Because anyone who said transitory was like, you're making the same mistake as, some other central banks out there. But no, we looked at it and we felt that in Thailand, that was the right call, and that we felt that it was important not to overreact to that data. And so we took what we called a gradual and measured approach towards policy rate normalization. And, inflation again. So we raised rates, but gradually, 25 basis points, ending up at 2.5%, raised them 8 times, and then we saw inflation again track back down, and now again below even our target range. But now, again, latest data, right? Q4 that we saw, sharp slowdown in the economy. One response would have been again, this slowdown is persistent, and therefore we should take rapid action and whatnot. But we felt again that again, in terms of balancing the risks and whatnot, we felt that slowdown was a temporary thing, and that we would see again that gradual recovery taking place. And again, I think events again, as we saw from the first quarter and second quarter numbers, that gradual recovery is taking place. So again, I think just some examples of how not overreacting to data, the latest data, is important. But it does create this risk that, again, the Bank of Thailand, as back then, is perceived to be behind the curve or not taking sufficiently proactive actions. And probably the third lesson, the third don't, is try to avoid doing too much fine-tuning. I think one lesson, for all central bankers is that there are limits to the effectiveness of monetary policy. And that trying to do too much has unintended consequences. And I think this is a tone that's been echoed by a lot of policymakers as well. Last point on the robust policy, mix, is that it is a mix. It is a policy mix. And the interest rate, which gets a lot of the attention, understandably so, is just one element of that policy mix. So one of the takeaways and lessons from past decade of monetary policy is, again, that it's important to complement monetary policy with other kinds of measures as well, as part of an integrated policy mix or integrated policy framework in the jargon of the IMF, and that recognize that the interest rate is just one of those tools, and it's a very blunt tool, a blunt tool which tries to achieve multiple objectives. So one way you try to achieve and strike a better balance is to complement that tool with other instruments. And so what are those other instruments, which again, we've been using as well? They include things on the macroprudential front, macroprudential tools, they include foreign exchange intervention, and they include, very importantly, financial measures, especially in the context of Thailand, debt restructuring. And so again, given the situation in Thailand where, again, debt is extremely high, and a lot of the problems are not necessarily of a cyclical nature, but of a more structural nature, we feel that undertaking policy measures to address that high level of debt sometimes can be better achieved. That balance you can strike can be better achieved by undertaking financial measures like our responsible lending guidelines, which are designed to try to encourage debt restructuring for borrowers that are in trouble, are a more appropriate tool than relying solely on interest rates as a means of addressing the financial stability issues. So last point I want to make in the time I have remaining is that so when we look at, again, our policy response, I, again, give you my assurance that we remain flexible, we remain practical, not wedded to any particular stance, and we're ready to adjust as the circumstances mandate. But then in terms of a policy response, I think it's important to recognize that the policy response encompasses a wide range of measures as part of an integrated policy package, and not just on interest rates, but there are also financial and other measures that will help achieve the objectives that we set out. So with that, thank you very much.
We would like to convey our deepest appreciation to Dr. Sethaput for his invaluable insight. Thank you very much. Ladies and gentlemen, the upcoming session will feature key messages from the Thai capital market regulators and international perspective on the topic, how Thailand's capital market can adapt to the changing world. We are honored to have Secretary General, the Securities and Exchange Commission, Dr. Porn Anong Butsaratragoon, President of the Stock Exchange of Thailand, Dr. Pakorn Pita Thawatchai, and Managing Director and Head of Equities and Post-Trade, Asia Security Industry and Financial, Mr. Lyndon Chow, join our panel today. Our Senior Executive Vice President of the Stock Exchange of Thailand, Dr. Sorapon Tulayasathian, will be our moderator for this session. The first panel discussion aims to offer how Thailand's capital market is reacting to a changing world. The panel features key persons from the Securities and Exchange Commission and the Stock Exchange of Thailand, alongside an expert with an extensive international market experience. In light of record and recent corporate challenges and market anomalies, there is a growing need for collective effort to rebuild trust. The focus now is on how Thailand can navigate for the crisis and also capture new opportunities for economic and capital market development. The adaptability of Thailand's capital market in the face of global changes and strategies for enhancing market integrity, resilience, efficiency, and attractiveness to investors. So, ladies and gentlemen, please welcome the speakers and moderator on the stage, please.
I'm just waiting for the music to stop. So welcome to the first session on how capital market can adapt to the changing world. We have heard from the Deputy Finance Ministers about the recovering economies and the government policy going forward. We have heard from our SET chairman about the three pillars of development in the capital market in terms of building back trust and confidence, in terms of enhancing competitiveness and leveraging on the sustainability trend. We have heard from the central bank governor about the remaining challenge that are structural and the policy that need to be robust to different possible futures. So this session we will zoom into the capital market and we will hear the questions in two rounds from both sides on the regulatory side, how to bring the trust and confidence back, as well as how to enhance the growth, the opportunity. So let me first start off by the outside-in look. We have Mr. Lyndon from the Asia Security Industries and Financial Market Association, who will share, could you please share what's your outlook on the current situation of the Thai capital market, the liquidity, the attractiveness, as well as the opportunity going forward?
Sure. Thank you very much. Can you all hear me okay? All right. First of all, I just want to thank the Stock Exchange of Thailand and Madam Secretary General of the SEC for inviting me to this distinguished panel today. My family and I, we love Thailand. We've been coming here during Christmas pretty much every single year except for COVID for the past 20 years. So it's really great to be back here in Bangkok and with you all on the stage. As a moderator just introduced, so I work for ASIFMA, but before SIFMA, I used to work at Morgan Stanley. I was at Morgan Stanley for 26 years, starting off in New York, but spending the past 30 years here in Asia Pacific. I have to forward my own slides. Hold on a second. Okay, and I trust that most of you perhaps don't know about ASIFMA. So we are an industry association. We focus on Asia Pacific on behalf of all the global investors and the global banks around the world. We have about 170 members here at ASIFMA, and we are one of three sister associations. We have SIFMA focus on the US market, AFME focus on Europe, and we focus on Asia Pacifics. And what we do is we serve as a bridge to intermediate discussions on behalf of global investors with regulators and exchanges across all of Asia Pacific. We're active partners with, for example, authorities in China, in India, in Hong Kong, Singapore, Korea, Taiwan. We're working with the IFC World Bank Group to help Vietnam in their aspiration to become upgraded from frontier market to emerging markets. And I'll just give you, you can see for yourselves the banks and the asset managers that we represent, all the name brands that you can think of, the Morgan Stanleys, Goldman Sachs, JP Morgan, Citi, Citadel, Optiver, they're our members, as well as the buy side, Fidelity, State Street, BlackRock, Vanguard, they're all our members. And we also have a growing list of non-bank members, a lot of law firms who help hold the pen for us on a pro bono basis to respond to consultations, as well as industry partners like MSCI and FTSE Russell. They're all our members, okay? And they're not passive members. They're not passive members. We all work together collectively to help better the capital markets for Asia. We all share the same goal to attract more global capital into Asia Pacific. And it's with this that we'd just like to share some observations, because it truly is a changing world. You can see on this chart that the interest by global investors to emerging markets remains strong. The trend is very, very clear. However, by the way, that chart shows the ex-China ETF, okay, ex-China. So this is without China, emerging markets without China, that remains strong. Because you'll see that investor interest in China has been going down. That's the red line that you see on the screen, okay? India has been surging, Japan has been surging. So as part of this whole global de-risking phenomenon, the China plus one strategy that you see on the economic side, we've seen in capital markets as well. However, this is a bit small, but you can't see it in, the top chart there, ASEAN. You'll see that amidst this changing liquidity, ASEAN really hasn't changed significantly. You're still at about 4 to 5% of the liquidity within Asia Pacific. And in particular for Thailand, the liquidity has been going down. So that's not been a pretty picture. Thailand, as we all know, and as shared by the speakers earlier, have been hit particularly hard by COVID-19. The deglobalization, shifting of supply chains, that's impacted Thailand as well. So Thailand has unfortunately borne the brunt of a lot of the global macro headwinds the past few years. And so what are some of these macro headwinds? So at ASIFMA, we conduct a survey of our members each year. And through the results of the survey, through speaking with some of our members, clearly, there are a lot of factors contributing to declining liquidity. There are some, perhaps because of the credit situation, you've had some corporate scandals, stock prices plummeting by 80% or over 90% in a single day. There's a new government that just took over just last week. Hopefully political instability does not lead to policy instability. That's always a concern from global investors. And the economic growth, as heavily cited, has not been strong. Okay, and retail contribution has also dropped off the cliff, down 16%, for obvious reasons. There's less money in one's pockets, and there's also less confidence owing to the lack of trust, perhaps, in corporate governance issues. Contrast that with what you see around the region. Vietnam, for example, is up 400%. So quite a lot of shifting liquidity even within Southeast Asia. We note the recent regulatory changes impacting securities lending and short selling. We'll talk about that in a little bit more detail later on. But as you can see, overall short selling turnover has dropped from what was previously 12% down to 4%. And even amongst the top 50 names, these are the names frequently traded by global investors, the most highly liquid names. The short selling turnover has also decreased from 8% down to 3%. So quite a lot of headwinds in the marketplace. But good signs, So despite all that, Thailand remains the highest share in terms of contribution to APAC liquidity amongst the nations in Southeast Asia at 37%. You can see because of the high turnover, it still dominates within Southeast Asia. And as cited earlier, there's been steady demand recovery of the tourism sector. We are also looking forward to our second home away from home this Christmas in Phuket. So we're all coming back. And therefore, there's an inflection point in the GDP. And we're really looking forward to steady recovery. Maybe I pause here.
Thank you, Lyndon, for pointing out the challenge that we have had in the past and the potential opportunity from the greater liquidity that coming to the emerging, but Thailand need to do to address in some of the issues that are concerning, as pointed out. So let me turn the questions to the SET President. Could you please elaborate on how SET has undertaken measures to improve quality, liquidity, and attractiveness to all type of investors?
Thank you very much. Last year was a challenge year, and the thing that we have been going through, we already heard about it. Either the corporate governance issue of the listed company, the stability of the politics in Thailand, the economy recovery, and lastly, the regulation change. I would say at the moment, we have been doing the rebalancing the infrastructure of the capital market quite significantly. On the issue that we would like to prioritize would be first, how can we make it international standard? We try to do it like global practices. And also, all the measure that we have been doing would be proportionate measure. If the Bank of Thailand use the gradual change, we would say we're using the proportionate measure. And lastly, we will do the dynamic measuring of the effectiveness of all those policy changes. So let me assure that for us, we keep on recording all the data, see the effectiveness, and see how can we make the market even be more efficient. Now let me move to the other issue on how we try to attract the interest of the foreign investor. At the moment, I would say that when you look at the challenges that we have, the economy, the politics, all the regulation change on the corporate governance that we have been improving, all of these issues are improving. The economy has been recovering due to the fact that our recovery is not universally recover, but more like a K-shaped recovery. Some industry already have been surpassing the pre-COVID era. However, in some industry, now the recovery just start. For example, the tourism, the wellness, the hospitality, or the healthcare. You will notice that the number of the tourists, which represent the potential of the growth of this economy, has been recovered. Secondly, when you look at the government, now the government can spend money. The budget has been passed, and we will have all those budgets that gonna be distributed to the local economy. And lastly, when you look at all these corporate governance issues, yesterday, a few days ago, actually, the Stock Exchange of Thailand, the Security Exchange Commission, and the AMLO has signed agreement to work together so that we can accelerate all these monitoring, prosecution, and penalty. So these are the things that show how we have been progressing. Those are the things that I would like to address first. And secondly, when you look at the product of the Thai capital market, in the past, we used to mention that our products are very traditional product. It's in the food and agriculture. It's all the healthcare. It's all in the hospitality thing. But nowadays, when you look at the number of companies in the new economy, you will notice that more than 160 companies are actually in the new economy, and more than that in the secondary business that they have already. More than that, when you look at Thai real sector, we are not like a one-man show or the one-side economy. Actually, we are very well diversified. Nowadays, the service sector represents the biggest part in the listed company composition, followed by resource, technology, and financial institution. So you will see a lot of diversity in the Thai capital market. More than that, it's not just a big company. It's a big, medium-sized, and now we even have a startup company that start to getting into the capital market. Another thing, when you look at the Thai company, they are actually very well regarded in doing business in a sustainability manner. Thai company has been included, the number of Thai company has been included in all the sustainability index, the largest number in Southeast Asia, and actually, interestingly, more than 14 Thai companies are actually the gold class, which means the best in the industry in the Dow Jones category. So you will notice that it's not just the ecosystem, the product, and the liquidity. Those are the things that I would say are interesting for the foreign investor to look into Thailand.
Thank you ครับ Dr. Pakon suggests that the measures will be with purpose, with proportional, and will be continually monitored and adjust, as well as point out some of the attractiveness of the Thai capital market, including diversity of company, sustainability, and many different insights that are vibrant. Let me turn to the question to our Secretary General of the SEC. You have heard of the challenge on the regulatory issues, and we'd like to hear your thought on what are the development and how can you ensure the informants of the measures to international practice.
Thank you so much. And first of all, I have to say that good morning and thank you for having me here. I'm sure that for the SEC Thailand, our aims and our mission is to ensure the trust and confidence in our market. However, as you see that we heard a lot of these two words, but at the SEC level, we believe in comprehensive action across the entire ecosystem to strive the market integrity. For the SEC Thailand, we have long established the solid foundation as the result of the financial sector assessment program demonstrated that our regulatory framework align with the international standard. And I think that beyond that, our main focus nowadays is to aim to achieve two objectives. The first objective is how we can to prevent the corporate fraud. And the second one is how we're going to maintain the fairness in trading. So allow me to start to show you how to prevent, defer, and defeat regarding to our main objectives. The first one, you will see that in the preventive mechanism, last year we launched the program what we call is strengthen the corporate governance on the listed firm. In that program, we aim to increase the oversight of the listed firm and all the stakeholders across the level, meaning that from the upstream to the downstream, and as well as to increase the oversight of the professional practitioners. Let me show you one of the program. What we call is the value of auditors or the value of audit. In this program, we aim to let the stakeholders involving in the financial reporting ecosystem to recognize the value of the auditors. This is the thing that I think with these actions from all the stakeholders, we can prevent the issues from escalating and so avoid the recurring issues that happened into our capital market. We also try to empower our investor also by let them know their right and have sufficient information to inform them about the companies in risk connection with the financial position and also the operating result and etc. So this is the preventive tools that we try to strengthen into our ecosystem. Let we move to the defer or deter the event. So as we have to adapt ourselves also. So we try to use data analytics and also to leverage the technology to help us to detect the fraudulence and also the wrongdoing activities. By doing that, we have to get the strong collaboration with the exchange and also to support the exchange to perform their function as the frontline regulators. So this is the thing that I think gonna deter the event and also to let the people who try to motivate themselves to do the wrongdoing that we have the mechanism, we have the data analytic, we have the preventive tools to detect the wrongdoing activities into our market. From the lasting point, I would like to say that we would like to see the speed up of the law enforcement. So we propose to amend the Security Exchange Act to increase the power to investigate and also to protect the witness. By proposing that act, the designated SEC staff can be the responsible investigating officer and can be able to directly coordinate with the prosecutor. We can bring the criminal charge against the criminal before the court. By this new process, we allow to kickstart the justice process by pass the authority or no need to submit the complaint to the police as we have to do and stated in the current law. So this is the thing that I think if we get that new act, we're gonna increase the speed of law enforcement. And as the Dr. Pakon mentioned, we also collaboration with the other regulatory entities. For example, we collaborate with the exchange, we collaborate with central bank, we collaborate with lots of agencies to speed up the law enforcement process by sharing data, use the same platform, and also have the solid process to reduce the redundancy of the process. This is the things that I believe that with all the actions, we can regain the trust and confidence. And I think next year we have to move to something else, because trust and confidence will embed it strongly into our capital market. Let I move to the second objectives. At the SEC level, we would like to see the fairness and orderly trading in the capital market. Recently, we implemented the supervision on the short sale transaction. You can see that we revised the criteria for the eligible securities that can be the security to be underline the short selling transaction. We also implemented the uptick rules that you have to do. We do not ban the short selling, but the short selling transaction has to be executed at the price above the last execution. And also we increase the quality of the supervision of the security firms. They have to they have to conduct the know your process assessment with the foreign security firms clients. And also at our house, we conducted the team investigation on the wrongdoing or inappropriate trading behavior in our market. So with these activities and also a lot of effort that put through the market, I believe that the market will take another step. And I believe that we are in the right direction to advance our capital market. We still have 2 more measures that will effective by the end of this quarter, these two measures aims to reduce the abnormal volatility. For example, the dynamic price band that will impose the band plus minus 10% from the last executed price that supplement with the ceiling and floor measures that we already have into our market. And we also implement the last measure. I can say that this is the last measure that gonna implement into the market. This is the minimum resting time. This is the measures that aims to prevent the misleading order and spoofing. So again, all measures aims to maintain the fairness and orderly trading in our capital market. And this is the things that I would like to give the strong confidence that our market will be better in terms of fairness and also in terms of reducing or try to eliminating the inappropriate behavior in the trading. Thank you.
Thank you very much. Dr. Pornanong mentioned that the objective is clear. We want to prevent fraud and want to level up the fairness and to prevent any of the misbehaving behavior. Another point that's quite important is that the speed of the process, which can be achieved by using technology in terms of detection as well as collaboration with relevant authority in the justice system. Dr. Pornanong mentioned that next year we will do something else, but don't have to wait for next year. We can do it next round. But before that, I would like to ask Lyndon to reflect on what you have heard from SET President and the SEC SecGen.
No, thank you. Very, very insightful and helpful comments. It's good to better understand the context for some of these actions that are being taken. Oh, that's right. I have to do this. Okay. So you know, I want to address some of the specific measures that the Secretary General just went through, but I'll get to that in my third point. Let me first quickly go through a couple of other suggestions to explore. And certainly, I'm not the expert here, but you know, what we see is that regulators in the region are looking around, and they're exploring what others are doing, and they're trying to, you know, copy or trying to do something similar when they feel that it is helpful to their markets. So there's been some discussion in some of the earlier slides about the Value Up program, which was started by JPX. It's spread over to the Korea Stock Exchange, and now there's some references to that in Thailand, and I think that's great, right? Because for the longest time, you know, in Japan in particular, owing to many corporate cross-holdings, just lack of transparency to understand really what is the true value of the company, it has diminished appetite from domestic investors to want to invest in Japanese companies. So it's really cool that a former CEO of an investment bank, Nomura, took over JPX, and he began to pioneer, you know, kind of not forcing, but maybe forcing by disclosure and open competition, you know, to try to encourage corporates to do a better job of boosting shareholder value, releasing idle cash, you know, more buybacks and dividends to investors, open disclosures about the true state of how the companies are doing, and that's a really great phenomenon. And Japan has seen, you know, rewards from that initiative. Investors are pouring in, and we're very appreciative of Thailand looking to do something similar. I think that would go a long way to identify early on through disclosures the true health of the companies, the true value of the companies, and encourage investors to have more trust to invest more. A second area that we've noticed has been a really dynamic fuel for the markets, and we see this both in Japan as well as India, is that they have very powerful pension programs. Okay, in Japan it's called the NISA, and they have 45 billion already invested just year to date, just this year. And SIP is a similar program in India, and it steadily generates $1 to $2 billion of incremental investments into domestic mutual funds every month. It also helps to spur the development of the domestic asset management mutual fund industry, providing more investment options, for these pension programs. And the tax incentives also encourage more investment. So again, I'm clearly not the expert here. Our members are, okay? So that long list of members, they're not just members, they're active contributors. We have regular meetings with our members. We discuss ideas. We look across Asia Pacific, identifying opportunities, identifying challenges. We have strong partnerships across the region. We hosted the National Stock Exchange of India in their 30th year anniversary in Hong Kong. We have regular engagement with JPX, other authorities. We welcome more engagement with Thailand. So that's on pension reform. But I really want to get to, some of the recent, reforms with respect to trading, fair trading. We all want fair trading. We all want to see bad guys punished. But we have to be careful. We have to be careful who we are looking to copy. Okay, so some of the stuff going on in Korea with the short sale ban, honestly, my sense is that there's a little bit of buyer's remorse from the regulator, but they can't back down now, because now it's caught the president's attention, it's caught the public's attention, and it's become a political issue now. So we're still working closely with them, trying to explore solutions, okay, but be careful of very blunt instruments. I think the Bank of Thailand governor said it very, very well. There was a fourth quarter drop-off, and then everyone's getting really, really excited. But interest rates are a blunt tool. It impacts everybody. So be careful what you do, despite the pressure to lower the interest rate. Similarly, financial regulation, it can be a blunt tool. So be careful what you wish for, because we've seen a drop-off in investments in Korea. We've seen a drop-off in Chinese investments, with regulators also focus on high-frequency trading regulations, focus on cracking down on short-selling securities lending, okay? But these are very, very essential, critical components to healthy liquidity in the marketplace. I was meeting with MAS, a Singapore regulator, a few weeks ago, and they were asking, because they just convened a committee to discuss how to grow the equity markets. And so, how do we attract corporate issuers to Singapore, to SGX? Okay, and the answer was really quite simple, right? You have to, offer attractive valuations for corporate issuers to consider your market over others. But, where does the valuation come from? A large of it comes from liquidity. Just like when I met with the CEO of the Hong Kong Stock Exchange a few years ago, before Bonnie, we sat down, and he said, I've got 3 priorities at the Hong Kong Stock Exchange. It's liquidity, liquidity, and liquidity. That's what it's all about. Okay, that's the magic formula. That's the secret sauce. Do you know how much market makers and quant funds account for in terms of liquidity in the US markets? Take a guess. 70%, okay, 70, sometimes up to 80%. Okay? Significant contributor of healthy liquidity to the marketplace. But when we introduce things like short sale bans or even minimum resting times, I'm sorry, I have to be kind of truthful in terms of reflecting our members' views. This will slow down liquidity. Why is selling bad? In a transaction, if someone buys, guess what? The other side is selling. There's always a sell against every buy. So, so we need the cells for liquidity. We need the market makers to come in and take the other side when no one else wants to buy or when no one else wants to sell. These are very healthy contributors to market liquidity. But when you increase the minimum resting time, they have to hesitate. Okay, so I'm going to be out there exposed and vulnerable, then I'll just increase my bid-ask spread. And therefore, liquidity is going to drop for the best bid and offer price. Likewise for securities lending. Uptick rule is good. I'm not saying that it's bad, right? But typically the uptick rule is as long as the last price isn't going down, you can short sell. But now it has to be, the price has to not be, it's just gotten harder. So you see the figures in terms of securities lending, short selling, dropping off. That takes liquidity away. So, again, we have 170 members. We are at your service. So anytime you would appreciate maybe, a different perspective, ultimately the decision rests with the regulator, rests with the exchange, but we're happy to provide free assistance. You don't have to pay a McKinsey or BCG, expensive consultant. You can organize a conference in beautiful Thailand. I'm sure we'll all love to come here, and we'll offer our recommendations for free. Yeah, so I don't know, is this my last point? I'm running out of time, right? Okay, sorry. A few other suggestions from our members. Let me just kind of read off the list. It's not in the deck. So another comment is, normally for public consultations, after the public consultation has been finalized, then implementation begins. But it was strange how the implementation to extend trading hours in March, before that was finalized already, domestic brokers were being reached out to say you have to make some system changes. Likewise,
thank you, Lyndon. You have highlighted 3 important points. The first one that we can learn from what other exchanges are doing, including the value up program, as well as other measures. Another important point is that the important to balance, to maintain the liquidity, to make sure that the market making function is still performing. And the very most important point is that you will offer free service for us, the advice. So
Actually, AXIFMA come to our office quite often, so we get to know your research result. But let me
so please the section please
let me address
response.
about your mention. Yes, I agree that one measures can impact positive and negative into the market, right? But as regulators, we have to balance between liquidity and also the fairness to the market, because we have investors, retail investors, and also the institutional investor, both domestic and also the foreign investors. So I sure that as a regulator, we keep in mind that every measures that we try to implement into the market we may not say that it's gonna win-win situation, but I think it's gonna advance the market for a sustainable way, not just in a short period. So if you look into the liquidity, please look in terms of long-term liquidity, because we would like to maintain the investment from our retail investor also. Because I will say later that when you discuss about the value up program, this is our initiatives also. And when you think about the long-term investment from the pension fund, and this is the thing that we collaboration with Ministry of Finance try to get to another step. For example, the individual saving account. So that's why I said that trust and confidence going to be the hot issue for this year. But next year, we're going to have a lot of good development that can bring growth into the market. Let me just answer this round, and then I will move to
I
Dr.
think you
Pakon.
can continue. There's a mention that I refer to ACC about how to convert saving.
But please welcome to come again, you know.
For free too.
For free services, we do not have much money, We affected by the turnover of the market also.
So please continue. There's a mention earlier, the deputy minister talking about how to convert saving into investment. So please elaborate.
Okay. Please, my slide, please. We have to adapt into the innovation, and also we have to adapt into the technology changes also. So at the SEC level, we see ourselves as the promoter and also as an enabler to market participants to move forward by leveraging the innovation and also the technology. So I think before I go to the value up program or how we're gonna increase the long-term investment into our capital market, let me go back to how we adapt the technology and also the market innovation into our capital market. We try to reduce cost and also to increase the market accessibility, especially for the small investors. So we have the project, what we call is the digital infrastructure. In this project, we try to have the ultimate picture as the end-to-end digital process, both primary market and also the secondary market. Our first phase is to focus to the bond market. And right now we are in the current state to have the web portal for debt issuing and filing in a digital way. And we're gonna move forward to next stage to have the end-to-end digital processes in the primary market and the secondary market for the bond market in near future. And the second thing is that we try to reduce the cost and speed up the process of opening the account. So what we call is easy onboarding. Last 2 years, I think we try to standardize the process and try to get the minimum data requirement for opening the account. What we call is a single form. And right now we let them portable the single form among the business operators, so that can reduce the redundant processes and also to speed up the opening account. And right now in the phase of talking to the central bank and also the Office of Insurance Commission, try to share the data regarding the KYC data. And we aim to portable that data among our regulated entities, so that things can enable the accessibility to the financial products and also the services. We also try to support fundraising to the investment token. We continuously adapt our regulations to support the diverse ICO business model and also to support the fundraising by the sustainability theme token. That the things that I think this is a very advanced step compared to the other in the region this is the thing that we try to promote. And we would like to use the strengthen of the traditional market player. For example, the securities firm try to help promote the fundraising through the digital asset also. And we even expand our sandbox to the digital asset operator so they can try their innovation and also try to do something else that can reduce cost, increase accessibility, but with the control environment. This is the sandbox that we just expand this year. And this is a thing that we try to promote the innovation. We try to promote the leveraging the technology, not just for ourselves, but also to move the market participants forward also. And lastly, that you mentioned, this is our mission to promote the growth in the capital market. So first, we aim to see the sustainable long-term investment more and more. And secondly, we would like to see the investment under the professional services, since the financial literacy for our community is not quite high. So we would like to turn the saving into investment. We would like to make that investment sustainable enough to make that sufficient capital in the future. So we would like to leverage the professional services into the retail investment. And also we would like to make the visibility for the Thai stocks and also the Thai capital market. So recently we launched the Value Up program also. And this is the voluntary reporting scheme. So the listed firm who volunteer to disclose their plan regarding the environmental practices or would like to lift up their corporate governance, they can volunteer to disclose their plan. But they have to commit to the plan. They have to report the progress. And also they have to commit to communicate to investor. So this is the thing that we incentivize the supply side to make their securities to be the eligible products for the Thai ESG fund. So incentivize the investor. So we asked the Ministry of Finance to increase more tax incentives to investors. So I think this is the thing that I think is a win-win measures or win-win effort to get the better visibility for supply side and to turn saving into investment with the tax incentives. And we're going to move forward to individual saving account in the near future. The one that our deputy mentioned is the Vayu Pak Fund. This will add more capital inflow into our market. In their plan, they try to launch within next month. The total amount of the new capital is about 100 to 150 billions. And the fund will have the attractive return structures for the investors. And also the Vayu Pak Fund will invest into the listed firm who give the attractive returns and also focus on corporate governance also. So altogether, I think this is to maintain trust and confidence and also to support the new growth to capital market while we wait for the economics result that gonna happen according to the government's policy. So this is the thing that I would like to add on top of the things that you mentioned.
So we hear that it's not only about low grade, but it's also about development and to invigorate the capital market with measures. We are short on time, but Dr. Pakon, please provide the last comment.
Certainly, I am a fast speaker. So I will just conclude into 2 points.
A lot of things to explain. I'm so sorry.
First of all, I would like to ensure that all the measures that come out will be dynamically evaluated. Certainly, if there is things that we can improve or something that we don't need, certainly we will propose it to our regulator to look into it. That's the first thing. The second thing, let me show you the slide on page number 3, please. The timing is crucial. At the moment, when you look at the price to earning ratio of the Stock Exchange of Thailand, you will notice that at the moment, our forward PE ratio is below the 5-year average in the past 5 years. So this is the thing that I would like to mention first. And secondly, when you look at the many industries, those PE numbers are also below the average. So once you hear the story about the recovery of the economy, once you hear about the stability, the better stability of the government, once you hear about all the things that we have come out to making the market become more trustworthy, I would say that this is the right timing to look into the Thai Stock Exchange again. Thank you very much.
Thank you. So I like to thank you all the participants, Lyndon from ASISMA, Dr. Pornanong from ACC, and Dr. Pakon from SET. And please await for the 4-theme seminar that follows. These are the themes that we think are quite attractive for this year: relocations, digital, sustainability, and the energy. Thank you so much.
Thank you very much, all the panelists and moderators, for a very interesting and informative session. Ladies and gentlemen, next is a session on game-changing opportunities in Thailand, the rise of new industries and investment relocations. We have Acting Senior Executive Investment Advisor, Thailand Board of Investment, Ms. Suthasini Samitra, Executive Officer, Gulf Energy, Mr. Smith Panomyong, and Chief Financial Officer, WHA Corporation, Mr. Nattapat Tanbunek, with Head of KPP Research, Kietnakin Pathara Financial Group, Dr. Nasha Ananchotikun, will moderate this session. So, ladies and gentlemen, may I now invite the speakers and moderator on the stage.
Good morning, ladies and gentlemen, and กราบสวัสดี speaker ทุกท่านด้วยนะคะ Welcome to the session just before lunch. We'll try to keep it short and not to keep you hungry for too long. My name is Nasha Ananchotikun, and I'm from Kietnakin Pathara Securities, and I'll be your moderator for this session. So this morning, I hope you have found the discussions in this morning insightful as I have. And today, this session will build on today's discussions, insights, and we're going to talk about how we can embrace changes and take the opportunity to drive Thailand forward with investment opportunities and new industries that emerging and how we can take advantage of that. And apologies for our key speakers who could not join us today because of the important and urgent matter that they have to attend. But we are fortunate to have with us senior executives and business leaders who are at the forefront of all the exciting developments today. So I'm sure that you all are keen to hear from their perspectives today, that we're going to have 45 minutes of discussion. So without further ado, let me start our discussion with just one first question for everyone, all the panelists. If, in just one sentence, what do you believe is the most compelling reason why investors should consider investing in Thailand right at this moment? You would like to.
I believe that Thailand offers all the essential components that investor needs, like conducive ecosystem, comprehensive infrastructure, strategic access to key markets, ease of doing business, and robust measures to support investment in Thailand.
Thank you, Khun Samit.
Okay, why Thailand? I think earlier this morning I was listening to the governor. I think he touched upon the credit quality issue, which I'm sure worries some of you. But when I think about this question, I think Thailand situates at the fine balance between the two superpowers. And we have history of playing the card right. And we maintain independence and survive and very resilient throughout global conflict. So we believe that we're in the right environment and Thailand is a place for you to be.
Okay.
Very good. And please.
Okay. The hardest question on your list is one sentence, right? Okay. Thailand is strategic location with a good infrastructure, a stable regulations, a comprehensive supply chain, and as he said, they're well positioned in the current geopolitical landscape.
Wow, that's a lot in one sentence, that, how Thailand can have a lot of things to offer to attract investments into the economy at this moment. So let me start with the policy, the big picture of the economy. Of course, policy is at the center of how we can, provide incentives or make the country attractive for foreign investment at this moment when there's a lot of changes going on in the global landscape. So let me start with Khun Suthasini. In light of a lot of the global geopolitics shifts and relocation of the investment, what do you think the policy, the BOI, how is the BOI adapting its policy to try to make Thailand attractive amid all the changes that's going on?
I think Thailand remains the conflict-free zone, and like Mr. Smith also mentioned, that we has been long recognized as the desirable investment destination for investment. We implement the supportive policy over the year, even with during the changing of some political situation, we remain supportive to the investor that our investment policy has the clear direction, and we has the main goal to support the investor all along. And of course, we do have a investment promotion strategy. For us, right now we start our the latest one from last year for 5 years. So the main direction is clear that we have a key target industry like EV, E&E, and also the industry that the main Thailand have been strong, like the agricultural sector, but we aim for higher innovation in terms of the biotechnology or the technology-related segment to create more value added to the country. And we provide both tax and non-tax incentive, but more importantly, we support in terms of the facilitation and ease of doing business. And we support both FDI and also Thai company, especially the SMEs also. And we adapt to the changing environment like green movement, the sustainability. So I think we have clearly make ourselves have the dynamic evaluation of the situation internally and externally, and talk closely to investor to provide the measure that can support them.
So there are many dimensions that the policy is trying to help the companies who would like to invest in Thailand. Do you think that DBI is doing enough in your view for the BOI and Gulf as one of the main investors, domestic investors in Thailand?
I think BOI has been very supportive to our business. And when you talked about strategy to move forward, I think at Gulf, when we plan, we think of the global trend, right? And we are aware that global trends are moving towards digital, global trends are moving towards clean energy. So although our foundations are in power generation, right? Recently, we moved into renewable, solar, wind, digital infrastructure, data center, cloud business. And we believe that although Thailand started a bit later than our neighbors, but we have large population, we have potential to be the center of digital business going forward.
Any words from the BOI? What do you think what is the BOI is doing? Is that sufficient to draw investment into Thailand? And the BOI, of course, is one of the beneficiary in terms of the industrial estates that benefit quite significantly from the relocations to Thailand.
Looking at the big pictures, as I mentioned, that we are in very strategic location, a good infrastructure. To be more specific, okay, we have a good road access, industrial. We have a port facility that is building the third one in Mataput. We have a very good communication system, wide or wireless. We have a very, beyond that physical infrastructure, we have very good banking system. We have the other services, industry, hospital, international school. Those small elements that's important to FDI, to attract the FDI to coming in. As I also mentioned, the extensive supply chain. Take the EV, for example. Looking back 3 years ago, there's always questions whether Thailand would get EV based or not, right? But evidence today we are, right? And those evidence of what BOI, what the government entity, what the private entities helping each other to attract those new S-curve industry. Yeah.
So let me go back to Kun Suthasini in terms of, we mentioned a lot of the readiness in terms of the infrastructure that Thailand has to offer, and we have seen the role of BOI very clearly in terms of the drawing EV production into Thailand. If you could share with us, what are the steps that you're going to do more, whether the BOI is going to do more to make sure that the infrastructure in Thailand is ready for the new industries, not just EV, but other industry as well. What are the steps that BOI are planning? What can we expect for next year or years after?
The infrastructure for EV, we include charging station, we include, I think next step is that we would like to introduce green energy. And Thailand, Thai government is considering about the direct PPP, and access to the third-party access of the electricity network. And I think this will support more investment in Thailand and make it the investment more green and sustainable. And for the EV, we also would like to, all EV and other industry also, we try to deepen the supply chain within Thailand. The only just assembling the finished goods is not enough. For EV, we would like to make the automaker to co-develop and maybe provide training, provide technical support to the Thai, especially Thai supplier, for them to participate in the supply chain further, and also in terms of the electrical E&E industry, we already start attracting investment in the upstream segment like design, also the some of the semiconductor manufacturing in Thailand. We will get the actual investment very soon because we already conclude the application approval already for some of the key investment in that segment. So with the deepen supply chain within Thailand in this key industry, we will have more competitiveness in overall.
Can I ask one question? Can we expect the EV package 4.0 anytime soon?
We only start the 3.5 and we are in the process of the investment, and the EV 3.5 participant will start production more and more from this year, and for the participant in EV 3.5 will start maybe in these 2 years. So we hope that we materialize and we get the evaluation of the measures before we move on to the next stage.
All right, very well. Thank you. So let me shift gear to the business side of the investment. Let me start with Khun Samit in Gulf Energy. And Gulf Energies, we know that has involved in utilities and logistics and many others business venues. What role do you see the companies playing in enhancing Thailand's infrastructure, to support the new industries and the investment relocations that we might benefit from, the geopolitics and whatnot?
Yeah, I think at Gulf, when we strategize, I think we think how we could help Thai economy and make infrastructure that are good for the investor to come. Right? Let's take digital business, for example. We've seen the top digital companies that come to Thailand, right? And one of their requests is for clean energy. How could they secure clean energy? Because in the new world of data center and AI, it required immense amount of power or electricity, right? While, again, if you look at the cost of making green energy, 7-8 years ago, 1 megawatt of solar panel used to cost, the investment cost used to be over 100 million. Nowadays, it's already below 20 million, right? We believe that with our scale and efficiencies, we could provide cheap and clean energy to Thai companies, right? And that's one element. I think the other element has to do with digital itself, right? When I was working for a multinational company 15 years ago, right, in Korea, in Singapore, there was a data sovereignty law which required national security data to be safe kept in the country, right? But Thailand also have national security law in relation to data, right? But I believe that the definition of national security data is different, right? In case of Korea and Singapore, security data include not only military data, but also all government-related data, all financial service all financial service data that the population, the companies are using, right? They consider that national security, and therefore those data must be kept in the country, right? When you apply that to Thailand, I believe that with with the right direction from the government, we listened to the former Prime Minister's speech last week. I think he gave a very clear direction that he want to drive digital economy going forward. Right? We believe that with the change in regulation, we are in a good position to support growth in digital economy going forward.
So with the growth of the data centers, the cloud computing, and maybe AI and whatnot, do you think that Gulf Energy would have a role to play in offering, infrastructure for all the businesses and investors to benefit from being in Thailand? So let me shift to WHA. So WHA, we all know that the company has been instrumental in attracting new investments into Thailand, especially after in the post-COVID world, where with the rise of the geopolitical order, relocations of the companies outside of China and whatnot. So can you share with us the trends that you've seen in terms of relocation? What kind of sectors, what kind of companies, and going forward, do you see that there will be more to come, and how can we benefit from this global trend?
Okay. From the WHA perspective, the flow, the demand that we see is still coming. From that perspective, let me divide into the existing sectors and the new sectors that we see. The existing sector, we still continue to see automotive, electronics, electrical appliance, consumer products. Still huge demand still flowing into Thailand in terms of FDI. The new sectors, we have experience, we have seen EV during the last 2-3 years. Today we see the supply chain of EV still coming in. We see the past 2 years, data center, some already comes, some big name already come, and more in the pipeline that is to materialize soon. Right? Yes, but overall we continue to see record high demand that's coming in. If you ask me 12 months ago, I'd probably say, my boss always say that we believe that 2-3 years of this cycle. But if we ask us today, we say that we see at least 3 to 5 years of this cycle, yes.
This cycle, you mean with the wave of relocation this time around?
Yes.
And what nations and nationalities?
The nationality, during the last 4 to 5 years, Chinese investors continue to be a big portion, but we also see I would say, coming back of the other group also. Japanese investors, European, US investors is coming back into the FDI arena also, not only Chinese, but overall Chinese continue to be a very big chunk during the last few years. In the WHA portfolio, Japanese investors continue to be the biggest, right? Chinese is a second. 5 years ago, Chinese is single digit. Today, around 20%.
But do we see amid the rise in the Chinese manufacturing in car production and whatnot, and we all know that Thailand has been a long-standing production hub of car for the Japanese brands mostly. Do we see the relocation outside of Thailand by the Japanese companies?
For me? Okay. Yes, there are news of some Japanese car manufacturer closing, but if you're looking at details of the news, the plans that close, they also explicitly say that the production volume is quite low in Thailand, and they centralize that production in Japanese. Many years back, we also have case of GM that closed and then selling plants to Great Wall Motor. That's 2019, if I remember correctly. I think it's similar. With or without the Chinese EV, this may already happens. And comparing to the actual utilization of the closing plant and the newcomer, The newcomer all each at least 2 brands that are with WHA, they are saying 150 to 250,000 units. The closing plans, they are talking 10,000 units. So overall production should have a positive impact. But the figures we see today that has a lower production, it might be possible, it might be the case that today it's still import, right? While they are building a new plant.
I see. So in net, you think it's net positive for Thailand in terms of the...
I believe so, yes.
That's very good to hear. If I could go back to Gulf Energy, and we have seen, the recent trends, and it's been a continuing trend that Gulf has diversified into various venues of the businesses, now into digitalization economy, and maybe into the virtual banking. Could you share with us the vision of the company? Why do you think diversify into digital infrastructure is important, and what are the plans the Gulf Energy is planning for, and how does it align with the economic goals of the country?
Thank you very much. Again, please allow me to expand on my earlier comments. When it comes to digital economy, right, do we know that how much Thailand spend on digital per month? Can anyone take a guess? Right. Hey, we as a country import digital service as much as $3 billion a month. That's close to 1 trillion baht a year, right? So foreign currency outflow, right? We pay for digital platform for SME to sell their products. We consume digital media, whether it's TV program or music, right? The country is losing a lot of reserve, right? And ultimately, it will impact the currency and volatility. Similarly, in energy world, we consume or we import more than 10% of our total imports we paid out in energy, right? With the introduction of renewable energy, it would substitute the fuel import, whether it's LNG or oil, because again, we can use solar and wind to produce our own electricity and kept them in batteries. So that's why the investment in energy infrastructure and digital infrastructure are critical for the country going forward. Because as we hear from WHA, right, some of our manufacturing sectors are losing their competitiveness. Of course, there are new ones that coming in, right? But they come in manners where all the profits and returns go back to the shareholder, right? Or other foreign shareholders. I think the country needs some degree of protectionism, right? To ensure that we allow our SME and our small businesses to grow and be able to compete with the foreign imports, right?
Now that you mentioned the word protectionism, well, I know that we have not discussed this before, but I think everyone is interested of how Thailand should position itself. Now that we have been losing competitiveness especially in the manufacturing sector, and a lot of us have, thought about should we become more protective for our industry inside the economy. Can you share your view? What do you think the policy should do, and what extent we should do to protect the domestic economy, may it be the policy or from the business side, especially for the SMEs, if you could share the view with us on that.
I think the word protectionism is somewhat no one want to talk about it, right? But in reality, if you observe, right, in the today global trade war, you have seen the U.S. impose huge amount of import tax on Chinese goods, right? We have seen Europe impose import tax on EV from China, right? While I think Thai people, they have good fundamental economy, but we are now, our SME are being hurt from flooded of cheap import goods from China, right? And the country need these SME, right? They are our population, our consumption would derive from the profit and the livelihood of these SME, right? If they go bankrupt and cannot survive, ultimately will suffer. So I think the protectionism not only apply to tax, right, but it also apply to quality, right, certification, being environmentally green, right? If you import goods, perhaps you should check their carbon footprint, right? Whether these goods imported are in fact in compliance with standard, right? And we've seen this done in many countries around the globe, right? Why can't we just follow their examples, right? Why do we have to play the good guys and zero import tax and it hurt our SMB?
Anything you would like to share? And I would actually like to talk, to hear the view from the policymaker. How do you balance between, drawing in new investment from foreign and, protecting the industry inside? Okay. But before that, do you have anything to add?
Just really small comments on the protectionism, as Kun Smith said. I think the key is the level of what to be done, right? And the fairness and level playing field is the key concept. Okay, overdo is not good for sure, but there's always balance in doing that to create a fair level playing field. Yeah.
So fairness is important. Any thought, Vincent has any?
For the policy level issue, BOI always work as a part of the team. Like the government agency, we join force, and because every agency, they hold their law and regulation, so they need to enforce whatever they can within their job description or their mandate. But we still also open to change the law or the rules, and maybe we can is it actually in about this the new online platform low substandard goods import goods issue? Actually, we are considering both enforcing the current law and change some law so that of course, it needs to be balanced, not overprotection, but still make sure that it's effective and also up to the global kind of regulation. We need to comply to the international law and regulation. This is the normal rule that we need to go, but of course, as we have been a very good guy all the ways, but we have to find a way. And I would like to emphasize that the government agency, we are working very hard to try to cope with this changing situation, and to make sure that we have a fair environment for the playing field for everybody.
I'm sure it's a very delicate balance between, drawing in foreign new money and also protecting the industry inside. Now that you're talking about, complying with the global standards and rules, I guess a lot of investors, whether they're existing investors in Thailand or the ones who are eyeing on Thailand right now, might be wondering about the global minimum tax rule that will apply in Thailand starting next year. Can you tell us a little bit about that? How is the BOI is planning steps to maybe help the investors, maybe lessen the impact of this new rule that will apply?
The key agency on this issue that they negotiate is the Revenue Department, and Revenue Department and BOI work closely to make sure that we can minimize the effect, or we need to comply, and we also comply to these new rules, global rules. I specifically talk on the Pillar 2 because that's the one that is mainly affect to the investor. And according to the Revenue Department, we heard that about 1,200 companies may be subject to these new rules. And because the rules need to be applied on a yearly basis, so the number may be different because it's according to the total revenue of the consolidated the revenue of the company. And as for the BOI, we has already announced the supporting measure like to minimize the effect on the tax exemption. We issue the measure that the investor that under the condition on this Pillar 2, they may request the deduction of the corporate income tax instead of exemption, so that they pay less pay some amount, so that overall they has the longer period of time that when calculate the tax is they have lesser gap under the 15%. But in the next phase, the Revenue Department is under the process to pass a new law to collect the top-up tax up to 15%. This law Thailand has to implement because if we don't have this law in place, the company would pay on the, at home instead of Thailand. That is not beneficial to Thailand at all. So this one, the Revenue Department, they need to go for.
So they will have to pay 15%.
Yes. And for the BOI, we have the mechanism to support the investor, not in terms of the exemption of the tax, but with the subsidy. But the subsidy is not related to the Pillar 2 directly because that's against the rule. It's not a reimbursement of what you paid to the Revenue Department, but is another measure that support the company under the Pillar 2 issue if they invest on the R&D, technology, sustainability, automation, and what's all the source of the qualified expense. And we may the board on the competitiveness fund may provide subsidy to them.
Again, since I started the discussion on protectionism, so please allow me to clarify. Again, we're part of the global community. We're a member of WTO. We cannot just unilaterally raise crazy or introduce crazy tax. We do have many good regulation in place, right? Quality standard, carbon emissions, local content, right? But the enforcement of these regulations are critical, right? I think we need government sector, government official to strictly observe what are already in place, right? We are aware that many of the Chinese manufacturers that come in, right? They come in with the whole supply chain, right? Although there are regulations that prescribe that you must have X percentage of a local content in your manufacturing, right? But they disguise through nominees and many others. I think the prudency and the level of thoroughness that we need to check the real ownership are critical, right? And we hope that we'll get that support from the government.
So the policy needs to be fair. And let me recap what Khun Sini said in terms of the measures to lessen the impact from the global minimum tax. That means that companies starting next year will need to pay 15% tax rate, which is maybe higher than what they were under the privilege of the BOI before. But then the amount that they have to pay more will be repaid to them in terms of subsidies. Is that under the right understanding?
We cannot say the direct relationship of the repaid or reimbursement, but is kind of That's kind of the mechanism, and it depends on the if the revenue department can pass the law, because I think that this one maybe is subject to be passed through the parliament.
I see. And this is comparable to other countries like Vietnam, Malaysia, because everyone have to be compliant under the global minimum tax. So the measures that we are introducing, are they comparable to what other countries are doing?
In terms of the top-up tax, many countries has already imposed, but some still under the process. And for the kind of the subsidy whatsoever, each country, each other country, they do not clearly announce exactly the mechanism. So it's quite a little bit difficult to say is comparable or not. It's kind of negotiation based on each project in every country.
Okay, I see. But at least investors can be at least that the BI is trying to come up with measures to help lower the impact. Anything that you would like to share?
On GMT, let me elaborate more. As a private sector, she may not be comfortable as a regulators. Okay. And from the standpoint that the WHA, we have industrial estate business in Thailand and Vietnam, right? Vietnam is 1 year ahead of us in terms of global minimum tax. Thailand is doing at the moment. But what our view is that GMT, global minimum tax, is actually the measures that at the end of the day will be level playing field of any countries that trying to be the FDI destination.
Right.
In the past, we remember that when one country is trying to grab a market share of FDI, they use a tax incentive.
Right.
But in the future, if you want to be the FDI destination, not going into GMT, not that easy. Right? So this is the, in a way, that would be a boundary, what can be done, what cannot be done to compensate that loss of tax incentive. The ingredient, the secret sauce of each country, I think we will see in next few years what would be done in each country. But every country, I believe, they will do some things to compensate that. But at the end of the day, it will level playing field.
Sure.
And on the contrary, my personal opinion, it means that a next country that trying to grab market share of Thailand and Vietnam for FDI would be harder because they cannot use tax measures.
And that makes it more important for us to ramp up or to strengthen other competitive edges to compete, not to use the tax incentive, right? Like having readiness of infrastructure, for example, or human capital, for example. Let me go back to WHA. Earlier that you mentioned that, this cycle, Thailand, as well as maybe other countries in the Southeast Asia, may benefit from this round of relocation that might last for 3 to 5 years. What is the plan? What's your plan for, making the cycle last longer, or to remain competitive, to gain, competitiveness amid, changing dynamics going forward, so that you can make sure that it's long-lasting impact that we will get from.
Let me put it this way. Pre-COVID, the benchmark that market observed WHA for land sale industrial estate in Thailand is around 1,000 right. Last year is 2,000, close to 2,000. Year before is 1,800. By saying the up cycle, this cycle, 5 years, it's around this level that we will see. Much close to double of what we did before COVID. And after that, it doesn't mean that going to zero. It's probably going to 1,000, 1,200 level, those kind of things. But coming to your questions, what can extend that? Let me put it this way. We have experienced a new segment. We have experienced EV. We have experienced data center. We're trying to grab more semiconductors. So I think it's always a moving target that what next to grab, what next trying to coming to Thailand. From what we get today, especially the digital side. We hope to see that the technology deployment in many sectors, AI, GSG reduction, green mobility, those kind of things that if we can deploy in the large scale in Thailand, that could substantially change pictures.
And for one thing that we've been talking quite a lot recently in Thailand is the initiative with the casino entertainment complex. Do you think that that would be, like, as you're the business leaders, do you think that would be the next big win for Thailand if we, going into this venture?
I think so. Again, if you refer to the governor's speech, I think he emphasized that over 10% of our GDP are derived from tourism industry, right? And if you refer to, again, the former Prime Minister's speech last week, he mentioned about the underground economy, which could be as large as 50% of the GDP, right? We agree with the government policy that of entertainment complex could bring some of these underground economies as well as further extend the tourism industry that we are already very, very strong. Right? In fact, the Ministry of Finance did run a survey asking the depositor and saver what product would they like to see more, right? And you know what's the number one answer? Right? They like the lottery saving or salak omsin, right? So I think it's in the nature, right? We've seen a lot of Thai go across the border to our neighboring countries to casino, right? So it's, I think we cannot hide the fact that it's in their nature, right? So why might as well just turn it into a business that pay tax, attract investment, attract tourism, right? Legalize it and make sure that we bring them up so it can be monitored, can be regulated. I think the key point is that how we manage and regulate them, right? I think it's good for the country. It could be another S-curve on top of the tourism industry that we're already very strong with. Yeah.
In terms of business interests, you think there are a lot of business interests into this new
I think there's little synergy with Gulf, where we focus on energy and digital. So we have to think really hard whether this is the right thing for us.
And Kun, from the WHA, where do you think the entertainment complex should be? For the first few ones.
Actually not in your script.
It's not in the script. This is totally off the script.
I have no idea. But just to say that from what Kun Samit said, we have my personal opinion, I have no objection, no different views at all. I think it's, why not?
All right, very well. I guess we're actually coming we are running out of time, and it's been insightful and very interesting, the points of view that you share with us today. But I do have one final question for each of you. If there is one single change or development that would most enhance Thailand's attractiveness to bring in as an investment destination, what do you think that one single change should be? Should we start from Kun Suthasini?
I think the key issue that's very important for us is the human resources, and we have been trying to develop so that we have the enough and highly skilled supplies to the industry. And I think that we need to train more in the term of the different kind of skill in terms of AI or digital. And actually, I would like to mention a little bit on the services sector that maybe is a new area that we didn't touch a lot. But the international business center or the regional headquarters and also the financial hub will be another segment that the government and the BOI is trying to help moving forward. And I think our guests here would be happy to see Thailand as the financial hub that the Ministry of Finance is trying to, maybe we have, would like to we are drafting a new legislation to help it, and also try to create the ecosystem to support this sector also in this near future.
So financial, high value added financial services, you think that it would be one of their key growth drivers for the Thai economy going forward?
I think so.
And human capital that you emphasize that should be. And Kun Samit?
As for private sector, if there's one thing we'd like to ask, I think we want stability in government policies and direction. And more importantly, not just the stability in policies. I think we would appreciate a correct public perception. Right? I think the public talked a lot about equality. Right? I think equality in Thai society means equal opportunities. But it doesn't mean that you need to drag the large capital group or large industrial group down, right? We need national champions who are efficient, who are able to compete in the international arenas, right? At the same time, these companies are paying tax, which again go around and to support the little guys who need support, right? So I think not only the continuity in government policies, but the correct perception of the public are the two critical components that we like to see.
So policy stability as well as the equality of opportunities that do you think is important for helping economy going forward? Kun Nathapat ka.
Okay, before answering your questions, I think to reflect the success we have today for EV, for data center, etc., and continued flow of the other FDI. I think it's coming from the cooperation of a good work of the government entity, BOI, EEC, all the involved ministers. It's coming from all that. So what we would like to see, what we would hope for is the continue of that good work. What we like to see, what we're hoping for is a stronger, continuous, strong signal from the government that we are very welcome the FDI.
Strong signal from the policy makings. Okay, very well. And I hope that, and I believe that today's discussion has shown that Thailand is not just adapting to the global new environment, but also, actively shaping the future for our economy too. So I would like to extend our special thanks to our esteemed speakers today. And please join me to give a big round of applause to our esteemed speakers. So I hope that you have enjoyed the session so far, and we will have more exciting panels in the afternoon. But now enjoy your lunch. Thank you.
Thank you all the panelists and moderator for the fruitful information. Ladies and gentlemen, next we will have our lunch break. The buffet is ready on the second floor and our staff will assist you in getting settled quickly. We will resume our afternoon session promptly at 1 p.m. in this ballroom. And private meeting at one-on-one floor will start at 1:30 p.m. We hope you enjoy your meal and see you again at 1 p.m. Thank you very much.